evening and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe, and share to stay up to date with the current trends. We welcome back Mr. Pranav Kant, a veteran in the oil and gas industry. Welcome, sir.
Thank you. It's a pleasure to be back again.
Pleasure to have you here as always.
Thank you.
My first question to you today is crude prices remain volatile with no clear trend. What are your thoughts on the matter?
Yes, the volatility has to be looked a little deeper. If we see the past week's crude movement, previous week close was at touching $100 per barrel for the Brent. It was at about 99.6. Now, this time we are at about 96. So overall, it has declined by $3. But this decline has come off the lowest it hit about 92. So this appears to be a kind of resurgence or the recovery from the weekly lows it was. And this recovery largely came by riding on the news cycle on two data points. One was the little bit better than expected inflation figures, lower than expected inflation numbers coming out from US. And secondly, the announcement of the dynamic zero-COVID policy by China. These two things lifted the sentiments in the oil market. But I guess we need to look a little deeper. China data, the economic data continues to remain tepid. And our well-considered forecast for China is that the economic data will continue to disappoint, which means that demand side would still remain rather muted. And the supply side, we are in a phase where across all the major supplying or the producing markets in the countries, the things are looking very, very good. There are no disruption to the production and supply currently being reported. So all that, so supply is looking good. So the market is really not tight as some people are predicting. And this week's price movement has not been really great for crude because of one very simple reason, where the oil prices have been essentially flat, but the US dollar fell almost 4%. So this little bit decline in oil prices, where the US dollar has declined by 4%, suggests that more on the downside risk in the coming week. So we remain bearish for the coming week as far as the crude oil prices are concerned.
Well, my second question now to you is, petroproducts such as FO and gas oil appear to have gotten stronger over the past few days. Do you anticipate the trend to hold as inflation cools down?
Yes, interesting here. And the link with the inflation, yes, there is a lot of optimism rising because of the inflation that it will boost the economic activity. But we also need to consider that largest refinery in the world in Kuwait, 𝐏𝐫𝐢𝐜 refinery, has come on stream. And that refinery is focused on heavy crude, so on the heavy crude. So the supply side boost onto the fuel oil from the refinery is likely to have an impact on the prices because the supplies would be better than what it has been so far. So to that extent, we would find it difficult to imagine that the firming up trend in the fuel oil could continue over the next coming weeks. And in line with our bearish crude oil prices call for the coming weeks, I guess we should not be expecting any major continuation of the firming up of the fuel oil prices.
So we're basically looking at a very volatile market in the coming weeks.
Less volatile, more bearish.
Well, thank you so much for your insight into the market and thank you for your time here today. As
Thank
always,
you. It's been a pleasure.
it has been a pleasure. Well, and thank you so much for all those who have joined us today. Continue to show support to the channel by liking and subscribing. See you soon.